Hi, this is today's video blog for June 2nd, 2011, and like most days we really want to find the strongest pairs to buy against the weakest. Today the euro was exceptionally strong on all time frames except the monthly, and at 6 o'clock the monthly trend shifted up. One of the weaker ones was the CAD. The dollar had bits of weakness today, a little bit of strength here, weakness, not as much strength, so it becomes what normally happens when you have a little bit of or significant weakness and then lack of strength. If the weekly and monthly trends down, it's safe to assume weakness will come back in. So you could have been looking at 430 here for possible dollar weakness again, which came in, and obviously the euro even before that was the strongest of all of them. So if you look for buys in the euro dollar around 4, you would have found that the euro dollar went from underneath above the hourly right here, coming up to 4, and when it broke out right here, you want to get in. Because of these counter trend signals, you might have actually gotten out of that trade right there with a small 10-15 pip profit. You got a pullback right here without that much weakness, and then it broke out again. You go long, and you can see significant real-time strength on the way up. Most of the time price stalls or reverses at the upper containment band. We have a Fibonacci area here, a weekly pivot level, so you just basically want to kind of draw a trend line underneath those highs, and when the statistical strength kind of dies out up here, you might want to exit the trade up here around 70. You're never going to catch every pip, but this last trade you would have been in here at 90 and pretty much rode this all the way up. You might have also, when it went sideways right here, drew your fib target on the last wave, and usually the first or second fib target is where it's going to stall. So many of us would have probably got out of this trade right here around 57 and missed the last few pips. Super strong euro, and also the CAD was consistently weak all day. So the EURCAD, let me type it on here, exceptionally strong one to buy as well. And notice also the just smooth trend. In keeping with our new trend line alerts, you can draw a trend line on this, and sometimes trends intensify, and what you can do then is to kind of yank your trend line up off of this low here. You can also redraw the trend line if it does get a steeper slope, which is what happened here. And you can see you would have been notified of a trend line touch right here. Didn't break down underneath here, and because this was such a statistically strong currency, you might have bought that breakout right here, and anytime it's at or above the upper containment band, usually it doesn't go more than the first or second fib target. So this would have been your profit target. It makes sense to take any trade that's likely to give you a potential of 2 times more than your risk. You risk 10 pips here. 21 was the logical profit target. If it shot through there, there's a big cluster of resistance up here from 31 to 41. And if the trade works, you're probably going to make 20 to 40 pips while risking 10 or 15. And this was one of the stronger pairs because the CAD was weak in real time, and the daily, weekly, monthly trend was down, and the euro was just incredibly strong all day. The yen also had bits and pieces of strength coming up to about 4, and so you could have bought the yen against the weakest pairs. The CAD was one of the weaker ones, so selling the CAD yen made sense. Notice also the price is underneath the hourly, so anytime that's the case, typically the trends are down. There's 2 entries really that we look for in a trend. Let's say you started trading it after midnight right here. You look for a counter trend move up, and then you look to sell. And let's get rid of the Trend Intensity Pro, which is a little bit slower of an indicator, and put on the new FX IntelliTrend Fast. This lets you see the real-time trend bar by bar, whatever the time frame you have up is. So on this little pullback right here, you can see extreme weakness on the way down, right near 100%. That means all 4 statistical tools that make up this tool are showing the maximum weakness possible. You have a little counter trend move up with less than what we consider an extreme amount of strength, and then this bar right here, there's almost no strength at all. It's a very high probability short, and once you're short, you pretty much know in real time incredible weakness, 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 weakness. Starts to slow down the momentum right here. You might decide to yank your stop down above these bars highs, and then as it's coming down again, notice the weakness is not quite as severe. Pretty high probability place to get every trade here, 66. short around 82. You made about 15-16 pips. And notice also on this pullback right here, no strength, and less strength than we had before, and far less than before. So again, you go draw your trend lines underneath the counter trend move up, you draw your fib on the last wave down, and you go short right here. And notice initially as this starts to fall, there's not a whole lot of weakness, so you want to yank your stop down. And when it gets down to these lower containment bands and kind of runs out of extreme strength, you might want to get out of half your trade at the first fib target, put your stop above, these last few bars sitting right here, and your average exit would have been somewhere around 52. Short here at 76, you made 24 pips minus the spread on that trade. And notice this move up here. The first time it has any kind of real strength, and then when it pulls down, it has less weakness and strength. And so if you shorted this right here, it's a less of a high odds trade. Usually once a currency starts to get some strength, and it's underneath the hourly, it will work its way back up to the hourly. This is usually a very high probability place to sell the first and second time it touches. So you might have made 5 to 12 pips here, and then this trade had a decent pullback as well. Now the pound, weak on all time frames, had a little bit of strength here, followed by the strength falling off a cliff here. And because the weekly and monthly trend's down, it's safe to say, after that point, to start looking for possible sells. And it started to get mildly weak right here at 630. Unfortunately, the dollar was also super weak, but you could have traded the super strong pound, super strong euro against the pound. Euro pound at that time, coming up to I think 5:30 or 6:30, was a high probability trade. Let's confirm the time here. Yeah, actually coming up to 6:30 right here. The euro was so strong that it actually took off even before 6:30, but we're coming up to 6:30. A little bit of a pullback right here. You can see it went up 10 pips. This currency is above the hourly pretty much the entire day, and it also, you have a nice little pullback to a monthly pivot level and the 50-day moving average. Major resistance coming up. You can see it's stalled price. Resistance once broken tends to become support, and this particular chart doesn't have our new IntelliTrend Fast. We'll put that on there just to showcase the clarity that it gives you. If you see a move up with incredible strength and the pullback has far less weakness than the strength on the way up, and the price is above the hourly, typically you're going to have a continuation move, and that's exactly what you saw here. Incredible, lots of bars on the way up, pullback, and it had just two bars of weakness right here and right here. Never buy after a bar of weakness. Wait for at least one bar of very lack of weakness. The intensity is just nothing to the downside, and then wait for price to go above these bars. Sideways move. You might have been long right here with your stop underneath the low, and as you can see, it's going sideways right here. A little bit of strength comes in, but not much. Previous day's highs is right here, which tends to be resistance. There's some selling there. Once it breaks through, there's a few bars of strength. So this is one of those trades that's not likely to scream up. You might want to tighten your stop or get out of half the trade here, somewhere around 17. Maybe you made 10 pips on the first half, and draw your fibs on that first wave. Most strong trends will make at least 2 waves up, so you might have exited half here and then the second half somewhere up near our upper containment bands and fib targets. So that concludes today's Forex blog. Sign up for our 2-week free classes to see more in-depth and detailed tools and systems and secrets that we share in our classes.